good morning. Lovely to be here, and a very, very big welcome to our dear friend Pannkaj Ghadiali, who's just come in. And this was his idea actually, because we were anyways going to do a budget talk. So he said, "Why don't we do it together?" And therefore, we thought that Pannkaj Bhai is an expert in tax. They are one of the most premium and most revered, respected accountancy firms in Mumbai, amongst the top 10 firms of Mumbai. So he's here to share his little inputs and knowledge about what has happened in the budget and what we can all look forward to. And after that, I will speak about market analysis and particularly which investment opportunities have emerged as a result of the budget. So, having said that, for all the ones who are seeing this for the very first time, who are here in this platform for the very first time, just to very quickly tell you, this is the Multimillionaire Forum. It's a free forum. It's an educational forum. We meet on the first Saturday of every month. This particular month being a special situation because last Saturday was the budget by the Honorable Finance Minister. So we had no choice but to shift it to the second. So all of you have registered. In future also, you will be kept updated on what is happening on the Multimillionaire Forum. We pick up any one relevant subject and we speak about that, have a discussion for about an hour. That's what we do. And in this session, in this system, we do not speak about any products. We don't speak about any stocks because this is purely educative and this is just knowledge sharing. So please restrict your questions. Do not ask specific questions on stocks or mutual funds or any specific investment product. What is going to happen is as we move along, please put on all your questions on the chat so that you don't forget or make a note of it. Pannkaj Bhai will speak for about 20-25 minutes, and then I will speak for another 20 minutes, and then we will have an open forum and Q&A. And as usual, what we will do is Q&A gives us a lot of freedom to interact and speak to each other. So in the Q&A session, we will not have the recording and we will stop the live streaming. So feel free to ask anything that you want in the Q&A section. But while this conversation is going on, although you can unmute yourself, please don't. And sit back, enjoy yourself, and there's great pieces of wisdom coming from Pannkaj Bhai and some very informative things about where to invest in the coming years. So Pannkaj Bhai, stage is yours, all yours, and please take over.
Thank you, Kartik, and good morning, friends. Thank you, Kartik, for those very nice words and for this exciting collaboration between stock market analysis and a discussion on the budget 2025. This year's budget has sparked a great high decibel positive reaction, particularly due to the unexpected generosity in the income tax slabs, tax rates under the new regime with the corresponding rebate provisions. All of you must be surprised at the numbers, so we'll give me a bit. We will be analyzing those. As of now, we have around 8.75 crore taxpayers or tax filers. Out of those, nearly 6.5 crores have a taxable income of less than 12 lakhs. This means about 75% of taxpayers will file returns but won't pay any taxes. So is it going to be true or is it a myth? We'll see that, we'll analyze that. And even though their income, which currently hovers around 6.8 lakhs, will rise to 11.8 lakhs suddenly next year, and they will still remain out of the tax bracket. The finance minister has said that revenue to the extent of 1 lakh crores will be foregone by the exchequer to bring in this change. Well, of course, the purpose behind this increase is clear: to leave more surplus income in the hands of the taxpayers, which can either fuel consumption or find its way into savings through bank fixed deposits or the stock market. A noticeable shift in focus is evident this year from creating infrastructure. The emphasis has now turned towards stimulating consumption. In 2014, when the Modi government took over, the infrastructure spend was around 2 lakh crores a year. Fast forward to today, that figure has ballooned to approximately 10 lakh crores annually, marking a five-fold increase in 10 years, which is substantial and which is a must for a country like India. One standout remark from the finance minister was trust first and scrutinize later. If this sentiment truly filters down to the bureaucrats, India can achieve remarkable progress. This being the eighth budget presented by the Honorable Finance Minister, we stand at the threshold of a historic moment. With her leadership, there is a strong possibility that she will surpass the current record for the absolute number of budgets previously previously held by Mr. Chidambaram, who had presented 9 budgets, and Mr. Moraji Desai, who had presented 10 budgets. But the benefits don't end with taxpayers earning below 12 lakhs. Even those with incomes up to 24 lakhs will see a significant tax saving of over a lakh of rupees. To be precise, over 1,10,000 rupees per year under the new regime. According to the rates announced so far. So, with this, I go on to this straight away to the tax proposals. Let's talk about the tax relief to the middle class, which I just mentioned. Now, if you have income up to 12 lakhs, does it mean that you don't need to file a tax return? The answer is no. You will have to file a tax return because the threshold limit is not 12 lakhs. The threshold limit is only 4 lakhs. The difference is covered by a rebate. And I will explain shortly what is that. So you have to claim rebate under section 87A. And I will explain you the myth of 87A shortly. Over and above this, salaried employees will continue to get standard deduction of 75,000, which enhances the non-taxable limit to 12.75 lakhs. To add to this, those who are also investing in NPS, then accordingly, based upon their investment, maybe which can be maximized at 50,000 rupees, it can even go to 13.25 lakhs. But such rebate is only applicable to income taxable at normal rates. So this is the caution which you have to take care, which includes salary, house property, and other sources. Any income which is taxed at a special rate, say for example capital gains, winnings, etc., will not be eligible for rebate under 87A. Let's explain. Let's understand this with an example. So I have taken here 3 cases. Case 1, where your normal taxable income is 12 lakhs. There is no special rate income. Therefore, your total income remains at 12 lakhs. The tax on that works out to 60,000 rupees as per the new rates. So it is 0 to 4 lakhs, nothing. Then 4 lakhs to 8 lakhs at 5%, 8 lakhs to 12 lakhs at 10%. So your tax works out to 60,000 rupees and you get a rebate of 60,000 rupees. Therefore, the tax payable is nil. But yet you have to claim rebate, you have to file your tax return. Now in case 2, you have income at normal rates of 8 lakhs. You have a special rate income. Let's say you have capital gains of 4 lakhs of rupees. So your total income is 12 lakhs. Tax on above, because capital gain is charged at 12.5%. So tax on above comes to about 70,000 rupees. And rebate you will get only 20,000 rupees instead of 60,000 rupees in the earlier example, because the tax on 8 lakhs is only 20,000 rupees. So therefore, on the capital gain income of 4 lakhs of rupees, you don't get any rebate. So the net tax payable is 50,000 rupees. In the third case, if you have a normal tax rate income of 10 lakhs of rupees, a special income, capital gains of 3 lakhs of rupees, you have a total income of 13 lakhs. Tax on that comes to 77 lakhs 500. No rebate is given because your total income exceeds 12 lakhs. So the moment your total income exceeds, even including the income which is under special rate, then if it exceeds 12 lakhs, then you don't get any rebate. And therefore the tax payable here is 77,500. A similar thing used to happen in the old scheme also. However, the biggest controversy here is why should the special rate income be excluded from the rebate? Well, that is what the finance minister has said in the memorandum of the budget this year. However, let me tell you that as far as the tax amendments are concerned, unfortunately or fortunately, 87A has not been amended to say that special rate income is not to be included. Similarly, there are 2 other sections where it could have been provided, which is section 112A, which levies tax on long-term capital gains. Again, there is no restriction. And under 115 BAC, which is the option for the new scheme, even there the section has not been amended. So therefore, if this is truly meaning that this has to be implemented, then before the budget is passed, they will have to amend one of these sections and put the restriction over there. Today, the restriction is being applied just by way of the government utility. The government utility does not. So when you are filing it when you are uploading your return or using any utility to upload your return, it will not accept it and throw out an error, which is not the scene, or which is not what it should be. Anyway, we go to the next thing. So these are the basic tax rates, the new rates and the old rates. Now, most of the places you would have seen the tax rates are 5% and all that, but here I have included the surcharge and the cess wherever applicable. So therefore, in the new regime, at the above 2 crores of rupees, your tax rate goes to 39%. Whereas in the old scheme, above 2 crores it is 39%, but above 5 crores it goes to 42.74%. So obviously, if you are earning anything more than 2 crores of rupees, you need to straight away come to the new regime. And overall, I think so, most of the time the new regime is going to be beneficial. I'll explain you shortly. Now, also let me ask you, what is this marginal relief? So many people ask me this question that, if your income just exceeds 12 lakhs of rupees by a small amount, let's say suddenly you get a bank interest or something, or you get some small capital gain. And if your income exceeds, let's assume that it becomes 12 lakh 10,000 rupees, then how is it taxed? So on 0 to 4 lakhs, the tax is nil. On 4 to 8 lakhs is 20,000. On 8 lakhs to 12 lakhs, it's 40,000. And on 12 lakhs to 12 lakh 10,000 is 1,500. So total tax is 61,500. Now, since you have crossed 12 lakhs of rupees, then there is an issue whether you will get full rebate or what will happen, or whether you will have to pay 61,500. Now, logically speaking, if your income has exceeded 12 lakhs just by 10,000 rupees, it would not be fair for you to pay 61,500 rupees as tax. So therefore, the government understands that, and they have provided what is called marginal relief. Now, in the marginal relief, in this example, the income exceeded only by 10,000 rupees. Therefore, at the most, what you can be asked to pay is that 10,000 rupees, but not so that your net income after tax should not go below what the income the person earning 12 lakhs will pay. So therefore, you will be granted marginal relief of 51,500, and you will be paying only 10,000 rupees as tax. Similarly, if this income was say 12 lakh 70,000, the tax payable works out to 70,500. Whereas his income exceeded 12 lakhs only by 70,000. So marginal relief of rupees 500 will be given, and the tax will be payable will be 70,000. Now, the moment you go beyond that, I think the full tax will be applicable. Now let's compare the old scheme and the new scheme. In the old regime, if income exceeds 10 lakhs, the rate is 30%. Whereas in the new regime, 30% is charged if income exceeds 24 lakhs. The break-even point is as under. So if you have income of 24 lakhs and deduction of, I'm assuming a figure of deduction of 7,75,000 just to drive home the point, your net income becomes 16,25,000 in the old regime, and it remains 24 lakhs in the new regime because no deduction is permitted under the new regime. Tax in both the cases comes to 3 lakhs of rupees. There is no rebate, there is no surcharge. The cess becomes 12,000. So in both the cases, your tax payable is 3,12,000. So in short, what I'm trying to say is, if you have to choose a new regime, then or if you have to go for the old regime, you can choose that, or it will be beneficial only if your deductions are 7,75,000 or above. Otherwise, the new regime would be beneficial. Now the question is, how would you get the deduction of 7,75,000 rupees? Because under the chapter 6A deductions, that is the PPF, LIC, NPS, etc., whatever, all those things you have, I don't think you can cross about 2 lakhs or 3 lakhs of rupees as deduction. But in the old regime, what is permitted is house rent allowance. So if you are a salaried person and getting house rent allowance, that deduction you can claim, and that is not available under the new regime. So if you have a house rent allowance, or if you are earning HRA, then there is a possibility. Or if you are given a big donation, either to a charitable trust or to a political party, then there is a chance that you can get a higher deduction. So that is the only reason why old regime could be beneficial over the new regime. Otherwise, by as a thumb rule, I think the new regime will always be beneficial. Going to the next point, the new direct taxes code. I think last night only we have all heard that the income tax, the new bill of the income tax has been cleared by the cabinet and will be introduced before the parliament next week. Now, whether the new bill will be really simple or in time to come, will it be amended several times to make it as voluminous as this act? That only time will tell. Will it go to the select committee? Yes, it was mentioned that it will go to the finance committee. It will not go to the select committee, but it will go to the finance committee for approval. So once it is tabled before the parliament, it will go to the finance committee for approval and then it will be approved by the parliament. Now, how soon the finance committee approves it, that is what we'll have to see. However, let me tell you, let's take all this with a pinch of salt because earlier two attempts made, first when Sri VP Singh was the Prime Minister and the second in 2010 to bring in new direct taxes code, both did not see the light of the day. I only hope and wish that this act becomes a reality very soon. The next amendment that we have seen is that updated return. Now, when you file a tax return, you are allowed to revise the return only for a particular time period, which is a very short time period before the end of the assessment year. Okay. Now, assuming that you have filed the return by July or September, you have hardly 6 months more to revise your return. So thereafter, if you find some mistake or something you have forgotten or anything that you want to change in your tax return, it's difficult to do so. You can't update your income. Supposing your AIS gets updated or your 26 AS gets updated and you find that, okay, there is some income which I should have taken, but I have not taken. So there is no way to correct that. So therefore, rightly so, I think 2 or 3 years back, the government introduced a scheme of updating your tax return. Now you can update a tax return only if you have an increased income. If you want to reduce an income, it is not allowed. If you have to increase the income and pay some additional tax on that. So if you update your return within 12 months from the end of the relevant assessment year, your additional tax is 25% of the additional income, plus interest, of course. If you update it within 24 months, instead of 25%, you pay 50% of additional tax and interest. Now, this year, what they have done is, so far it was allowed to update, you were allowed to update your return only for 24 months. So that means after 12 months or after 24, up to 24 months. Now they have added, instead of 2 years, you can go up to 4 years. So if you can update your return even up to 36 months or up to 48 months. And in both cases, the tax rate is 60% and 70% plus interest. Now, I think there is some, according to me, this is not a very workable or very attractive scheme for the simple reason that by 36 months, even if you have missed some income, and if the income tax department has to reopen your assessment, the time limit is 3 years. Now, if you have not got any notice or if your scrutiny assessment is completed before that time, then there is no reason why one would like to go and update the return. So therefore, that is one area where the question is that whether it is worthwhile updating the return. And after 48 months, there are very little chances that you'll need to update your return. The only attraction here is that yes, if you have forgotten now you have to also include your foreign income here. And many times, if you forget that there is some small foreign income, some dividend, some interest, if you have an account abroad, or if you have some assets abroad, which you have not included here, then there is the reason why you could file an updated return and correct it. However, there are some conditions of filing updated returns. Section 132, if you have any search or survey, or if your books of accounts have been seized, then you cannot file an updated return. If your proceedings or assessment is already going on, then you can't file your updated return. If some prosecution has been launched against you, then you can't file an updated return. So there are various conditions which are pre-existing. And of course, the tax rates which they have given are really not worth it, because if you have to pay 60% additional tax and 70% additional tax, that's a lot. Maybe you want to take a chance and see if you're caught and if you're levied a penalty or something. So in the updated return, as I said, the assessment can be carried only up to 3 years and 3 months from the relevant assessment year. And if your income is the income which is forgotten or escaping assessment is less than 50 lakhs, it is not practical to do it. If it is more than that, in any case, if the notice is issued to you, you will not be allowed to file an updated return. So that is about updated return. Then this is a simple thing. This is more applicable to the corporates rather than the individuals. That in case of, if a company A, supposing, had losses, and it had losses for a couple of years, first couple of years, let's assume that for 6 years it has made losses. Then company A gets amalgamated with company B, and the loss will be carried forward in the hands of company B. Earlier, it used to happen that B was getting a fresh opportunity of 8 years to set off those losses. Now, the department has said, or the tax law has said, that it will be only for the balance period. So, you have to count 8 years from the time the loss arose. So, in the year in which the loss was loss was reported, from that time only 8 years will be allowed, whether in the hands of the original company or in the hands of the successor company. So this is one simple lacuna which was there, which is corrected and which is fine. Yes, this is now another thing where, benefit of two SOPs. Everybody heard about the finance minister talking that, two self-occupied properties will not be taxed. So the way the tax department works is that, if you have a house, if you're owning a house, and if you're not occupying it yourself, or say one house you are supposed to, or you're allowed to occupy yourself, there is no tax on that. Even if whether you occupy it or whether you keep it empty, there was no issue. But if you had an extra house, then whether or not you are let it out, you are supposed to offer that income as a deemed let out property if you have more than one house. Now this year's budget has made a change and says that, okay, up to two houses you did not disclose anything. Now let me explain this to you by way of an example. Earlier also, in the last year also, you were allowed to have two houses, but there were certain conditions. Now they have removed the conditions to make life simple. So let's take the first case. If you are owning two houses in Mumbai, pre-budget, what you were allowed was only one house as exempt, because there were certain conditions and you could not comply the conditions if you had both the houses in Mumbai. But post-budget, you will be able to exclude both the houses. In case two, supposing you have one house at Alibag and another one at Mumbai, again pre-budget you were allowed one, post-budget you will be allowed two. Because in case two, what you are supposed to do is, even if you had a house in Alibag, but you are not able to occupy it because your occupation or profession was in Mumbai and you had to stay in Mumbai, you had to stay in a rented house in Mumbai. Then Alibag was allowed as a exemption. So now that is not safe. So similarly, now in case three, if you have a house at Surat and one at Mumbai, again pre-budget it was one house which was allowed. Now post-budget it will be two houses. And in case four, of course, Mumbai you are owning one house and the other one is rented out. So pre-budget also one house is allowed and post-budget also one house is allowed. But I think the good part is that if you are given a house property for rent, I have just calculated that, if you have rental income up to 17 lakhs, you will go without paying any tax. Because when you have rent income of 17 lakhs, you are allowed a 30% deduction as a standard deduction. So out of 17 lakhs, you exclude 30%, which is about 5.10 lakhs. Your net income will be 11.90 lakhs. And that is the amount which is below 12 lakhs. So then again, you will be entitled to rebate and the tax payable will be zero. So then there is some rationalization in the rates of TDS and TCS. I will not dwell much into it because there are only some change in the limits, okay, the threshold limits, or some minor modification or some tweaking in the rates. But there is one thing which is worth mentioning, which was specifically mentioned in the budget speech, that if you are paying rent, then you are supposed to deduct TDS, or you don't have to deduct TDS up to 6 lakhs of rupees. However, the wording of the section does not say 6 lakhs of rupees. It says that if you are paying rent of less than 50,000 rupees per month, then you don't have to deduct. So if it is even 51,000 rupees per month, and if you have paid rent only for 1 month, even then you are required to deduct TDS. And the other extreme also, let me tell you, say supposing you get a rent of 25 lakhs of rupees for a house, and you enter into an agreement for 5 years, and all the 25 lakhs rent is for 5 years. And let us say that he is paying you upfront the entire amount of 25 lakhs. Then again on 25 lakhs, there will be no deduction because the rent per month is not exceeding 50,000 rupees. Then there are in some cases, there was some higher TDS for non-filers of income tax. Now, this was very difficult to manage. Every time, when you had to deduct tax, you had to make sure whether he is filing the opposite person is filing income tax returns or not. It was not always possible to find out whether he has filed tax returns or not. And therefore, now those higher rates have been removed. However, those people, if you are paying to somebody who does not have a PAN, then you have to still deduct at a higher rate. So there, the rate of deduction is 20% if somebody is not having a PAN. The next amendment is in TCS, where on certain products, on timber and other products, I don't think that is relevant for this audience, so I will just skip this. TCS on foreign remittance, yes, everybody will be keen to know. On foreign remittance, what was allowed without TCS was a limit of 7 lakhs of rupees. Now, the 7 lakhs has been increased to 10 lakhs. If you exceed 7 lakhs, the rate still remains 5%. So if you make a remittance outside India, above 10 lakhs of rupees now, you will be liable for TDS at 5% or TCS at 5%. And of course, you can claim that TCS in your tax returns, or you can treat it as advance tax. So there is no real loss to that, except that it is reported to the government that you have made a remittance. Now, for two other important changes which have come for, that is for TCS on foreign remittance for medical expenses or medical treatment abroad. Earlier, again, the limit was 7 lakhs. Now it is increased to 10 lakhs. Above 7 lakhs, now if you go above 10 lakhs, if you go, it is at 5%, which the rate was the same earlier also. Remittance for any other purpose up to 10 lakhs is going to be nil from 1st April 2025. And for any other purpose, it will be 20% above 10 lakhs. And if you're taking an overseas tour program, again, the limit was 7 lakhs of rupees. From April 25, it will become 10 lakhs of rupees. And more than 10 lakhs of rupees, it will be 20%. The only change which I have not included here is for education purposes. If you are remitting anything abroad for foreign education of yourself or your children, then if it is from any borrowed sources, that is from the banks or financial institutions, then there is no TDS, I mean no TCS required. If it is from any other source, then TCS is required, like in normal cases. No TCS on sale of goods. Again, there was a provision where TCS was required to be collected when certain goods, if you are having a turnover of more than 10 crores, and if you are selling goods to one party for more than 50 lakhs of rupees, there was some TCS requirement. And if you don't deduct that TDS, then the receiver had to collect TCS. Now to bring in simplicity, they have said that forget about the TCS, only TDS is required.
Pankaj bhai, just giving you a time check. It's 11:33.
Yes, okay. I think another 2 minutes I'll wind up.
Please, thank you.
So there's a perquisite on tax, perquisite on salary. Earlier the limit is 50,000 rupees. Now they have said that the limit is now removed and it will be notified by the Central Board of Direct Taxes. So that is about the perquisite. There is some amendment to charitable trust. A small charitable trust having income of less than 5 crores of rupees they were supposed to re-register every 5 years. Now that 5 years has been extended to 10 years. Then there is some clarification on the ULIP. If ULIP is exceeding 2.5 lakhs, then there was a question mark whether there will be the taxable part of it would be taxed as capital gains or as business income. It has been clarified that it will be treated as equity-based long-term gains. Then this is for AIF, which is not very important, so I'll skip that. And the last thing is startup tax holiday on startups. Now they were giving extension of one year every year. Now this time wholeheartedly they've said that okay, I'm giving you an extension of 5 years. So any startups up to 1st April 2030 can take this exemption. So 3 out of 10 years they will not have to pay tax on profits. IFSC are a little technical, so I won't touch that. I think with that, I come to the end of my presentation.
Thank you so much, Pannkaj Bhai. Thank you, friends, for all of you who joined. And for all of you who've joined a little late, just want to very quickly tell you that this is, what we do is this is called the MultiMillionaire Forum. Every month, first Saturday, we have a little conversation. We share some knowledge on a relevant subject. Of course, this was a very obvious thing to do in February, which was to cover the budget. Now, talking about budget specifically, what we also would like to talk to you is, the finance minister gives part A and part B. Now, what we have just done is we have had Pannkaj Bhai covering part B of the budget, and I'm going to talk about part A. Now, what is very interesting and very important to understand is that a lot of times, a lot of things, a lot of details are there in the budget speech. And frankly, in the last few years of budget, I have really enjoyed myself reading between the lines. What is spoken, what is unspoken, what is then corroborated from the economic survey, what is then to be corroborated from other data points available from India Data. It's a beautiful website. There's tons of data from there. And then we put all those things together. And when we put all those things together, then we figure out where the opportunity is, where we should invest, how we should invest, and which are the sectors which are going to make a lot of money. And obviously, if we are invested in the right places, then we are going to make a lot of fortune. So initially, when the budget came out, my sense was this is a 7. But then when I start reading the fine print, I actually thought maybe this is a good 8.5 to 9, right? So we'll go back and we'll very quickly give you some of the very, very interesting things about Viksit Bharat 2047, which is the vision of the government, right? So there are 4 very fundamental things which I think they are going to, that was the undertone, because now this is the first budget after after them taking power. The first was in July, but that was a mid-year budget. So this is really the vision budget, which is why I'm saying this is the first proper budget for the next 4 or 5 years. Having said that, what they are very clearly wanting to do is they want employment to go up. But हर जगह पे, in every sector, they want more and more employment to happen. So employment से क्या होता है? That the more employment you create, of course you're going to get income. There is going to be income tax. If not income tax, then there will be GST, because the more people they earn, the more they spend, and there is a GST. So GST is already standing at 20 lakh crores right now as we speak. Because it's 20 lakh crores, we still have February and March to go. We will beat last year's target, and not only that, next year is going to be even more. So just imagine if next year's GST reaches somewhere like 25, 28 lakh crores, then that 1 lakh crore that we are going to forego in this income tax benefits is already lost and forgotten. I mean, it's a non-issue, right, from the government point of view. Okay, so what will happen, and now what are the sectors that are being thrown at your face, but not so directly, not so obviously? Okay, so as I said, more employment, more people will come into the tax bracket and tax nets. They will boost consumption. Acha, consumption mein there's a very interesting section in the memorandum of the budget. Right at the bottom, you have things called what becomes cheap and expensive. So if I look at the cheap and expensive, life-saving drugs gone completely out of it. Then whether you want to buy branded jewelry, plastics, footwear, EVs, motorcycles, a lot of things have become cheap, and cheap by a significant percentage. Your dutiable goods, if you're importing something from outside, even personally, from 35% down to 20%. So see, what's happening is everything that you do, spend. Go and spend that money. Now, if you save the money, fantastic for you. I mean, good for you, not so much of government's interest. But if you spend and you pay GST. And as a result of that, on one side, they're boosting consumption. The other side, they're collecting more GST. So therefore, there is a massive opportunity in everything, right? From you start dining, which means restaurants and food business, you start doing entertainment, you start buying liquor, you start buying tobacco. I mean, more consumption. This is the sequence in which people spend money, right? Then you will buy garments, you will buy footwear, you will buy furnishings, home appliances, accessories. Then once this is done, you'll go to automobiles, two-wheelers especially. And then the next level is travel and tourism. Then you go to buy electronic vehicles, more sophisticated and luxury vehicles. And finally, real estate and housing. This is the sequence of expenditure. So there is a boost on every single angle across this undertone of this budget, right? So consumption is one. Now, the other very, very important thing I want to talk about is energy future. See, there is something very, very interesting that this government has been doing. We have committed to the whole world that by 2070, we are going to become net zero. Now, net zero is one of my favorite topics to speak on. I can speak for 2 hours on this thing. And if you don't know net zero, then please do a little bit of Google. Give me a call. We can talk about it. But this is a subject you must know for the next 20 to 30 years. This is going to be the single most greatest opportunity of this country ever. We will become what is known as the Saudi Arabia of oil. So when we spoke about that G20 session a couple of months back, that's the time we introduced this concept, and it was all over the news that India is going to become the Saudi Arabia. What Saudi Arabia was to oil, India will become that in terms of data. And that is what India will become in terms of energy. So that is how crucial this net zero thing is. So coming back, what is happening in net zero and how do you understand this? One of the greatest announcements that happened, net zero basically means, for very simplicity's sake, that every time, for example, we use a car or we use an AC, we are throwing carbon in the atmosphere. That carbon has to be neutralized, okay? In very simple terms, net zero. Like a quick definition. So the announcement was 100 gigawatts of nuclear power expansion. Now, the moment this was announced, there is so much of flutter and activity happening around the world. Just Google this thing. Take us to the next slide. SMR nuclear reactors. This is massive. This is a small little nuclear reactor which is very scalable. And this, once vendors and companies get licensed to manufacture this is very, very clean energy. And a lot of people get into it. Some very large Indian companies already announced. You can see the name on the screen also for compliance reasons. I don't speak a name, but it's already there. Massive investment that this company is already announced that they want to do. A Russian company has come to the Indian government saying, we'll share all our technology with you if you want to get into this nuclear power. So nuclear power and 100 gigawatt is a massive amount of power. And there's a lot of action which will happen in this space now. Okay, then on the other side, we are reducing our gas ammonia imports. We are promoting CNG. We are making it mandated, okay, for our mobility and public mobility e-buses. So there's a lot of push on all these areas. Now think about all the manufacturers of all these of all these automobiles. That is where the opportunity lies. So friends, it's crazy. It's enormous. Now rooftop solar free electricity. You already know what is happening in this space. Muft Bijli Yojana, getting 300 units of power free for every family. So imagine, they get the power, they can power their EVs, they can use it in their house, and then they have surplus electricity, which they give back to the government. So out of nothing, they've created a positive income, a positive cash flow for thousands of people in India. Now, you and me sitting in Mumbai and Delhi, Bangalore, we don't understand all these, but there is a lot of action happening here, and companies are changing their future based on this one initiative which was launched a couple of years back. So this is massive. 1 crore households already covered, by the way. Okay, this is happening in real estate. Very interesting. Now, this government is actually, and I'm not very big fan of pro-government, but if they are doing a good job, I must, give them the credit, right? Awas Yojana. Now, these are things, see, we read about it and we say, okay, chalo, affordable housing. This is all social agenda happening. But you would be surprised to know real estate has had some fantastic returns in 23 and 24, more than 100% plus only in the real estate sector. Okay, all the companies here have gone through the roof. Okay, not the major ones. See, your favorite companies in your portfolios haven't performed because you're not looking at the place where it was supposed to do this performance. Okay, so Awas Yojana, Zari, somebody is doing annotation. Can you? This is Mr. Anuj Jain. Can you just, Mr. Jain? Can you stop this annotation? Can you just watch your PC or phone? Um, so anyway, coming back to Awas Yojana, so this government has already completed the target of 3 crore houses. Okay, and they have said that another 2 crore houses are going to be made in the next 5 years. So think about the amount of rally, the teji that is going to be in this sector. It's going to continue because when you are making houses, you need everything, right? You need cement, steel, iron ore, you need commodities, you need everything, ceramics. All allied industries really make a lot of money in this. So this is another area. Okay. Now let's go to a very, very interesting area. Is there a way you can remove this annotation? Okay, go back and share the presentation. Let's just try that. Okay, yes, this, friends, this is another theme you must teach all your children also about, okay? This is called digital public infrastructure. In very simple terms, this is about 3 very important things: people, data, and money. Now, whatever infrastructure you see, like the kind of infrastructure picture that we've shown you here, we are moving at a gallivanting pace, creating infrastructure. But now this infrastructure has to be managed. How will it be managed? And for that, it needs a corresponding digital infrastructure. Okay, right from things like cloud-based hosting to tech administration. But it's not just that. Okay, there is so much behind it. So, for example, let's take a small little example. You're going from here to another city. Okay, you sit in your car, you call, or maybe let's say you call an Uber. So Uber services, which is taxi services. From the taxi services, you're going to go to an airline. The airline is going to do a face scan if you're on Digitiyatra these days, or otherwise they will, check your authentication through, your PAN, Aadhaar, etc. They'll check you in. You get inside there. Once you do that, you go to the other city. Again, there is a cab service available there. Now, just imagine if all these things could be seamlessly integrated and the amount of data that comes out from them. This is one example. The other example is, what is happening in terms of, your fast tags. So all the information that is collected, the UPI system that we have, the BharatNet that we have, the direct benefit transfer which is happening. So, basically leakage is gone out of the system. Now we can talk about digital public infrastructure forever. Now we think these are all again, we think these are social schemes, part A of the budget. No, not so much, not so sexy, not so interesting. But think about it. Who's going to manage all this? Acha. Now, when you have so much of data, of billions of payments happening, where is all this data getting managed? At some data center, at some place where all these things are getting coordinated. Now, very simple. You walk into the airport, your face is identified. But how? There is somebody who doing something somewhere. Somebody has stored these services somewhere. Somebody's got all that information there and is getting relayed at super high speeds, because you're not going to wait there for 20 minutes just to have a face scan done, right? So these kind of things are happening, and data center is one of the biggest verticals of DPI, digital public infrastructure. Now, all these companies that are there in this data science business, okay, the server business, the hardware business, because you don't need servers, you need server farms. Not even you need server warehouses and like massive scale farms. And then these services, by the way, our government is smart. They're not only doing it for India, we are exporting this also. We're doing this for other countries as well. We're managing their infrastructure. And what again happens as a result of data center? See, data centers, all these servers, even your computer, if you just touch your laptop also, it's hot, So imagine 1,000 of them, how much heat will be generated. So you obviously need cooling systems. So all the cooling companies then come into the picture: cooling, air conditioning, etc., etc. So think about the opportunity that this is creating, which is why you see company number 101 to company number 801 on the stock market are making money. But company number 1 to company number 100 have not made so much money in the last 3 to 5 years. That is the answer why my portfolio is not doing good, but the market is going up. Why small cap is overvalued, why mid cap is overvalued. They're not overvalued. A lot of them are very, very good fair values because there's a lot of profit happening there. And they are in the business that the government is actually supporting and driving it. Okay, let's move forward. Okay, so infrastructure. Pankaj Bhai already mentioned a little bit on infrastructure. Now, this time, we were all very disappointed. On the first day of the budget, we said, kya hai? Kuch zyada announcement nahi kiya. But okay, when we read the budget speech, we see, okay, she's talking about, modernization of 40,000 coaches. See, a lot of activity is happening here. But because we forget. We don't have it in front of us. So we sort of say that, okay, maybe they didn't announce too much of capital expenditure. But hey, there is a lot of capital expenditure happening. 10 lakh, I mean, that 10 lakh crores have gone up by another 11% this year. 1,000 more airplanes have been called for. Just imagine the number of people traveling. In the last 10 years, about some airports doubled. So we are from 74 airports to 150 international level airports. Now from 150, we want to go to 250 airports in the next 5 years. So whether it's airports, whether it is maritime activity, whether it is roads, transportation, everything is going. Now I'm going to show you some figures which will throw you off your chairs. Okay, outlay dikhao to. Let's just look at this data. This is some crazy, insane data. Okay, now this is coming from outlay on major schemes of the government. Okay, now these kind of things are where analysts sort of try and dig out, and they find where's the money in all this and where's the investment opportunity. Go down and just go, and we don't worry about everything, but we are just highlighting what we've highlighted for you. Just focus there. So this is Awas Yojana. Awas Yojana has a total expenditure of almost 80,000 crores only in this financial year. So this is urban, 19,000. Go forward, please. Okay, urban Awas, by the way, is the housing. Okay, and rural. Sorry, ये तो जल जीवन आ गया. Awas कहाँ गया नीचे? Okay, this is Awas urban, and the Awas rural is about 50 odd thousand. So that will come a little while later. Okay, Jal Jeevan. My goodness, this is another massive area. 67,000 crores allocated for this year. So that 67,000 figure is for this year, this budgeted year. Can you just go on top so everybody can see the label or the title on the page? Yeah. Budgetary estimate 25-26. Okay, so that's the figure which we're looking. Come to Jal Jeevan. Now, Jal Jeevan. Har ghar jal se nal. I mean, how do these kind of things happen? Government to apna kaam karta hai. But we have to think about it. How is this actually happening? Okay, how is this happening? So the way this is getting created is that you need infrastructure from the lake, from the plant where the water is getting cleaned and purified. You need something, right? You need a pipeline to carry it to all the remotest part of the country. Har ghar jal se nal means every single household that is there in the country should have a tap and should have running water from there. I mean, it's a very simple looking socialistic project. But if you think in terms of investment opportunity, humongous. All the steel companies, pipe companies, PVC pipe companies, look at the pipe companies. There are companies in this whose names also you don't know. A lot of these names seem like what the hell. But the way they have gone, and they've not just gone on a bubble. They have sales, they have profitability. And Pannkaj Bhai will verify that it's very difficult these days to fudge in this world of GST. We all think window dressing and all these kind of things, but it's difficult to fudge. That's my opinion. And there's a lot of activity happening in this Jal Jeevan mission also, because that is actually creating a lot of infrastructure and obviously giving a lot of orders to a lot of companies on this. Gram Sadak Yojana, 19,000. Okay, here comes out. You can come back to that Awas thing. Awas Grameen is about 55,000 crores. Then a couple of other very interesting ones, which I'm looking at is, look at this defense. Defense, we think there was nothing spoken on defense. Look at all this research and development, aircraft, aero engines, naval fleet, special projects, all this put together, 1,05,000 crores being spent in this year itself. Massive allocation. Okay. So which means if you have any doubts of government's, agenda, or you think a lot of people were talking about, PSU companies down ho gaya, etc. Ye ho gaya, wo ho gaya. And, government ne sab election ke liye sab kiya tha. So please review your thoughts, review your decision making. Defense is still at 105,000 crores. Okay. Now let's show them railways, and let's show them, what is happening. Railways. So railways, it's very simple to say 40,000 coaches change karna hai. We want to change the signaling systems. We have Vande Bharat trains, super fast trains, but they need super fast tracks also. So all these things putting together, just look at all these little. I mean, by the way, this document, if you are interested in Googling, it's called Outlay on Major Schemes About 1,000 crores based on budgetary estimate of 25-26. And by the way, the good part is, again, I'm repeating, all this expenditure is happening in the right direction, and that's why companies, private sector and public sector, are getting a lot of orders. And because of that order book position, which is huge. But order book also we showed you in that India Opportunities edition of MultiMillionaire Forum, where we analyze all the order books of all these companies, just to get a sense that in the next 6 to 12 months, how much business is going to generate and how much of profits will generate out of these order books. But 2,13,000 is what the government is going to spend on railways alone. Roadways, 2,86,000 crores. I mean, This is all humongous amount of money and investments that are happening. And if we take cognizance of this fact, then I don't think we make bad investment or we'll make wrong investment decisions. Then we may want to be adamant and say that, our favorite bank will go up. Ek din to, chalega aage, but that's not really the way it works. It works. Companies, move forward. Portfolios make money when companies make sales, and they make good sales, and they make good growth of profit also. And that is what is most crucial. Some other very interesting things. Of course, they want to develop iconic tourist destinations, but I know there are a lot of infrastructure challenges, and let's leave that aside. So we all know there is a lot of work here to be done. But look at this, the other side. Food. Now, we are an agriculture country, right? We want to double seafood exports. See, we don't talk about 20%, 30%. We want to double straight away. We have 5 aqua park facilities, which we are going to have for this year. Now, very interesting. What are they saying? That private sector, please come even in this post-harvest activities, which is generally supposed to be Food Corporation of India or some government forte. But they are saying, come, get into the business of aggregation. मतलब सारा commodities collect करो, distribute करो उसको modernize करो, storage को efficient बनाओ, get cold storage, get warm storage, get efficient supply chains. Okay, processing करो, marketing भी करो, branding भी करो. Do all of this and more. So the amount of opportunities that you will see in companies involved in these areas is also massive. Now, by the way, some of these places, we have a direct solution to that, right? Because if you look at the mutual fund space, there is a direct realty fund. Okay, go ahead and invest in that and you're sorted. Or there could be an energy fund. Go ahead and you can sort yourself out. You can get invested there. But on the other side, there are a lot of things which are not so obvious, like digital public infrastructure. There's no fund for that. Rural, there are just about funds coming, but those are more FMCG and consumption-oriented funds. So funds we have. There are portfolio baskets also. There's a lot of technology happening in the equity space. Of course, make use of all of that and more. Okay, so let's come back. That means what I'm trying to say is that opportunities on one side, on the other side, you have a product to match it. So you can actually get invested as much as Monday. If this was last Saturday, Saturday also market was on. But anyway, we wait for Monday. Okay, let's move forward. Okay, so this is where we come. Okay, so that's about it. Let me see if there is any other. So there is a little bit of activity. They didn't announce too much in defense, but you saw there was a lot of announcements and allocation, sorry. And we are going to do a little bit of deep tech funding schemes. Now, what these funding schemes are, we'll wait and watch. But this, again, is a sector that we will watch very, very carefully, because there's a lot of stuff that is going to come here. I'm just looking if there is anything else in terms of some interesting areas that we can talk about first. No, that's about it. So infrastructure, tourism covered, energy covered. So these are some of the great opportunities, friends, which are coming up. And of course, if you have a little bit of extra money, which Pannkaj Bhai can help you save, then you come and invest it. So with that, what we'll do is we'll close this formal session of our talk.